Hey, control the trade here, June 10th, 2020, taking a look at my Twitter account and a tweet that I posted 6 days ago. And I'm not saying the top is in, but sure would be interesting if it is. If you look at this SPY, no reason we can't run up to approximately 323 before pulling back. I believe 2 out of the last 3 days, we've hit 323 and change and pulled back. Not hard, not a hard pullback. And then we almost hit 323 today. Now I have a ton of different lines all over my chart, which you'll see in a second here. And let's take a look. So at some point, I don't like to get rid of some of my lines. I know most people like to get rid of their lines when they're charting, but not me. I like to look back. I think that they can be important down the road. 322.25, and you can see how important that has been. Look how it's been riding around that number. Today was not a good close. Let's take a look here. The low of this candle is 319.36, and we closed today at 319. That is bearish. You don't want to close below the low of the previous day's low. Opposite would be closing above the high of the previous day's high is bullish. So we could be in for a little reversal here. I mean, it's been very tricky. The reason I say this, I mean, there's a lot of gaps here. We're still ultra bullish on the chart overall because we're so far extended from the 20 period moving average. We're so far extended from the 50 day moving average as well. So there's a lot of room to move down and still have a healthy chart. And what'll probably happen is if you start to go down, fill this gap. We'll see what happens when the gap, when there's a reaction to this gap. We'll find out if there's buyers down there or if it starts to capitulate and start to flush down towards the 20-day moving average, maybe down to 300 or so. And then that could create all these short sellers will start to pile on, institutions will pile on, and we could start to see a big downturn, but it really won't be anything to panic about if you're a long-term investor. Even down at 280, look at this, even down at 285, we've been on such a run. 288 is the 50 period moving average. Staying above the 50 period moving average is pretty healthy for a chart. So there's just a wide range where the spider can go right now. And there could be some panic though at that point. And you couple that with some of the news that's going on and uncertainty. Everyone all of a sudden is getting comfortable. It's weird. The stock market, everyone's getting complacent. Everyone's getting complacent with COVID. And it just doesn't seem like that's going to continue. I don't like to use the word seem, but you know, markets like to fill gaps, and there sure are a lot of gaps to fill. I mean, look at this, even down here, there's gaps. Look at this huge gap right here from May 15th. I think 278 is somewhere we will eventually visit, 280.40. I will not be surprised if over the next month, let's say June, July, I think we might start to see a turn, a little cycle here, down towards the 270s. And even lower. I'm not a doom and gloomer. I'm not a bear. I'm just kind of looking at the charts and trying to think ahead. Let's look at some longer term charts. Let's take a look at the weekly chart. You know, could this be a topping candle right here? It's very interesting. If we close the week, any week we close above 321.28, then the trend continues. But this looks like it's forming into something that could start a reversal here. Been in an uptrend for a long time now too. And we have some resistance right up here. Look, there's the open here, 323.14. The high is 333. So there's also a lot of room to move up, still be bullish, and still pull back at that overhead resistance at 333. Let's look at the monthly. Let me take my lines off because this is ridiculous. Go to the monthly. Here's the monthly. This chart is interesting. 339.08, of course, the all-time high. And 323.41. So let's take a look at the monthly chart. And look how fascinating this is, by the way. I just noticed this. The 100-month moving average is 217.29. Guess what the low was? Our biggest low was 218.26. I think we might have even gone lower than that in after hours, if I recall, but it's been a while since I looked at that. So these moving averages are really important. The historic numbers are really important. I think we were right near what people call it, the Trump election low, or the start of his presidency. It was like, what, 215, I think? So we kind of visited down there. Didn't go all the way down, and we've been rocketing up since. So I would still be careful when everybody's bullish and all the retail traders are crushing it, making a lot of money. That's when you have to worry about a turn coming really, really soon. So just be aware. And you can see where we might start to have a reversal right here. And I really do think these gaps will start to get filled. And it could create some panic. If they start to get filled and there's not buyers down here, then you're going to see the next gap get filled, and it's kind of a chain reaction. I don't see why at some point, honestly, we could get down to the 260s before the year is over. I'm not saying that's going to happen right away, but if it does happen, there will be buyers. I would imagine there'll be buyers down there. But this gap concerns me all the way down here. 222.95, and the open was 234.42. Maybe that one will never get closed, and that happens sometimes, but it's just an awareness to have. I would just look at the breakout area to kind of see where we might revisit, and that is right about here, back in May. Thanks for watching this video. Check out more videos on my YouTube channel, and please follow me on Twitter and post a ticker if you want me to analyze the chart. Thanks a lot, and remember, don't let the trade control you.